the deal's been sweetened in the CARES Act to roll this out. And applications have been open for the past 8 days, since 2 Mondays ago. I'm going to explain. I hope I'll be able to provide something useful for those of you who have applied and have some questions, and as well as those of you who have not. First, and I don't want to bury the lead, it is a sweet deal, provides a free option for a long-term loan if we were approved for it several weeks from now. So we are recommending that all of our eligible clients at SCORE apply for an EIDL loan, and within that loan application is where you apply for the loan advance. Eligibility is so broad that I haven't run across a SCORE client yet who is not eligible. Small business owners in any legal form, I described some there, and most all private nonprofits are eligible to apply for the EIDL loan in advance. The applicant's the primary minimal requirement, they must have been in operation on January 31st of this year. The former program required being in business for 1 year. The terms are very generous. There are no fees at all to apply for this loan. Though the maximum is stated at $2 million, and as I said, because this loan program was primarily intended for those who suffered physical and property damage through regional disasters, we believe most all loans will be for a much lesser amount, because this long-term loan is intended now to provide for working capital needs, payroll, notes payable, rent, utilities, accounts payable. The maximum term of the loan, though it's for working capital, will be up to 30 years. I believe we will find out later this week, as in a few weeks as approvals come in. Perhaps all the loans will be 30-year loans. We do not know yet. Right now, the stated interest rate will be 3 3/4% for for-profits, 2 3/4 for nonprofits. Payments will be deferred for up to a year. Interest will accrue during that time. There will be no prepayment penalty for this loan. Personal guarantees will be waived for loans of $200,000 or less. Just as an example, under these terms, a $25,000 loan, if one were to be approved for one and take it with a 30-year term at 3 3/4%, would be a payment of approximately $116 a month. In the application, the borrower will self-certify only that they are experiencing a temporary loss of revenue due to COVID-19. And the permitted uses are very broad. It can't be used to pay off other loans or open new locations or make capital expenditures or expansion. It's for working capital broadly defined. Kathleen, next slide, please. This application, which is made directly to the Small Business Administration, and I said has been open for the last 8 days, can only be completed online at the, you can Google it and you'll find it, or there's the exact web address for the online application. It's about 5 screens. Our clients tell us that if they're well prepared with the information in front of them, it takes less than 15 minutes, perhaps 10 minutes, to apply and successfully submit. It's very important we tell our clients to record and retain the application number that's on the page after they submit their application, because that is the only time you will see that application number. Right now, there are no email replies in this skeleton system, email updates. That's the only time you will find your unique application number. Right now, there's no Christmas rush, because you can apply for this EIDL loan through Christmas of this year. And the current customer service center, which some of our clients have used, though they have found a person willing to take their call, but little clarity to this process is there on the screen for your benefit. In addition to basic information on your organization, your nonprofit organization or your business enterprise that you would expect, owners, name, the inception date of your business, your EIN number, for-profits will be asked on this form for only 3 pieces of company data: their revenues for the past 12 months, the business's cost of goods sold for the past 12 months, and the number of full and part-time employees as of the end of January. Nonprofits will be asked to substitute for that their most recent 12 months cost of operation, which we believe is their total actual operating expenses, and their number of employees, full and part-time as of the end of January. The time frame for approval for the loan is unknown until our score, for us, until our score clients start receiving approvals. We have some that did apply on the very first day, and we're tracking their progress for both what they hear about from the loan or the loan advance. But it's expected that it will take at least several weeks. So not months, not days, but patience is in order because it'll be several weeks. The applicant can decline the loan with no obligation and no costs if they are approved. Take note, this is a loan, and to distinguish it from the separate program that Rich will discuss, there are no forgiveness provisions for this loan. Kathleen? I'm going to pivot and talk about the of this loan program called the Loan Advance. It is an actuality and could be better called a grant. It is intended for a quick infusion of capital for business, and the cash grant, as stated, will be up to $10,000 because no one has received this grant yet or was applied for it. We do not know how they decide how much an applicant will get, and whether everybody will get 10,000 or whether everybody will get 1,000, or between 1,000 and 10,000. We'll be glad to share that information as we build our knowledge base from our actual clients' experiences. I think there will be much light shed on this by the end of this week. Those dollars, I believe, will just be self-reported. They are intended to be for working capital needs, payroll and other operating expenses. The key aspect of this loan advance is that it can only be requested inside the EIDL loan application. So you go to apply for the loan application, and on the second to the last screen, the applicant would check the box. There's the exact quote, I would like to be considered for an advance up to $10,000, and that applicant will be in the queue. It's the only way to access the free money. SBA aims to transfer these funds to the applicant's bank account at this point within days, so not months or weeks, after the application is successfully submitted. The term successfully is their term. The advance is essentially a grant, and I want to assure you, as much as we know, and from the words of the SBA, not the chat rooms, not the message boards, it does not have to be repaid under any circumstances, even if the EIDL loan is denied or if the request is declined by the borrower. I'm going to stop there. I turn over to Rich and his program. Thanks for your questions that are coming in. We'll be glad to answer those at the end.
Thank you, Steve. And Kathleen, I guess we move on to the next slide. Well, thanks, we did. I'm going to stop, have everybody take a deep breath, because we're leaving one program and moving to a different program. So there is no flow here. We're just moving to a different program. The second, when President Trump signed last weekend, 2 weekends ago, the $2 trillion CARES Act that had provisions to do all sorts of things. That increases the unemployment. It gives a $600 per week add-on to that. It bails out some of the airlines. It does a bunch of things. But in that was a $349 billion Paycheck Protection Program, abbreviated PPP, but you see all sorts of variations as other things come to people's mind. It turns into Pennsylvania Power to Light, PPL, PPT, PP other things, but PPP is its official name. It is a loan program with guaranteed loans through the SBA 7A. And SBA 7A is that old SBA program that you could go to a bank if you needed a little extra credit help. the SBA would guarantee a portion of the loan as an inducement to help the bank make the loan to small business owners. They've modified that for this purpose so that the guarantee will be 100% of the loan, but it still goes through the bank. The applications for that opened last Friday, and they will continue through June 30th of 2020, or as long as the $349 billion lasts. Unlike the EIDL, which is a disaster loan based in part on the credit worthiness of a business applying, not totally, but in part, this has nothing to do with the credit worthiness of the business applying. This program is designed purely to funnel money into your employees or your laid off employees. And so the eligibility depends on being in business at the beginning of the year and having employees. They're not on your credit quality, not on your credit score, not on your ability to repay the loan. It also, unlike the EIDL, contains a provision for the loans to be forgiven if the borrower maintains their payroll during the crisis. That is, if they use most of the proceeds for payroll. Kathleen, next slide. So that's the 30,000-foot view of this. Let's get a little more detailed. The PPP is available to small businesses, 501c3s, sole proprietors, independent contractors, or the self-employed. So like the EIDL, it's hard to find somebody who cannot apply for PPP. The formula for the loan is simply the pre-crisis payroll costs of the business times 2.5. And so monthly payroll costs. And so if just pretend on average you had a $10,000 monthly payroll last year, $10,000 times 2.5 is $25,000. And that would be the amount of the loan. $100,000 payroll, take that times 2.5. The maximum is $10 million. And a small business is defined as any company with, basically any company with fewer than 500 employees. So that covers all of us. The maximum loan amount is $10 million, and that's probably about where a 500 employee company would hit. So none of us will hit the maximum. The loan proceeds, once they're given, may be used for, and primarily for, most payroll costs, health insurance, so forth, in addition to salary and wages, interest payments on loans, rent, and utilities. They may not be used for infrastructure or for capital improvements or for buying a new stove or something like that, if you have a restaurant. So they are really focused on payroll, interest, rent, and utilities. There are no collateral or guarantees, and there are no loan fees. So again, this is a free program. The loan is due in 2 years and 1% interest. There are no payments for 6 months. So if you get this person who has, let's say, a $10,000 monthly payroll, if they get $25,000 in a loan, that loan will be due in 2 years at 1% interest. The feature that's remarkable about this program, is that if you use that money, or at least 75% of that money, to maintain your workforce or bring your workforce back so that the number of full-time FTE, full-time equivalent, your number of full-time equivalents after the program, after you get the money, compared to last year's before you got the money are the same, and you've used at least 75% of the proceeds for payroll, that loan can be forgiven. The exact details of that forgiveness formula are yet to be clarified. That's the basic. What you see in front of you is the basic formula for forgiving, but the actual details of it, we're still waiting to see them come out. But it can be forgiven. Also, unlike EIDL, for which you apply directly to the SBA, these loans are given through the bank. The SBA guarantees them for the bank, but the loans are given through the bank. You apply through the bank, and in this case, of course, most are online because you can't go to the bank anymore. They're using a common form that the SBA has suggested, but they're each putting in little variations, still within those rules. But unlike EIDL, there is no exact common form that everybody's using. There's a relatively similar application form, and then everybody's adding a tiny little twist to that. It's all right, you go through the bank. Most of those banks are overwhelmed. The program opened up last Friday for small businesses and not-for-profits. It opens this Friday for individuals, contractors, some of the self-employed, and so forth. And the banks are overwhelmed, as you can imagine. I've put two good sources of information as links here. The first one is to the SBA itself, where they give details of this. The advantage of that first one is this changes frequently. Sometimes overnight, they're issuing new details to the rules. And so I've stopped printing things out, because by the time I print them out and I look at them the next day, they're not exactly right anymore. This takes you directly to the SBA. That's about as up to date as it's going to get. Also, our own Lancaster Chamber is a model in the country for keeping up-to-date information. Tom often writes, I haven't checked it this morning, but yesterday, he writes a daily letter kind of updating you on the program and other government assistance loan programs. So it's an excellent source, and it's right there. And that he also keeps that he and they, it's not just him, keeps that pretty much up to date. Next slide, Kathleen, sorry.
Huh.
Too many, I won't even go there, sorry. Getting ready to apply, if you're going to apply. And we would suggest, if you have employees, again, like EIDL, it's worth applying. There's no cost to it. You can always turn it down. There's no free gift, unfortunately, with this one, but you can always turn it down. Because this goes through the banks, most banks and credit unions are SBA 7A lenders. Many are participating in the program. Some are saying, we would like to participate in the program. We're still thinking about it. We're still waiting for further guidance. And if you get on their websites, they will say that. Some are taking applications today. Most, but not all, most are restricting applicants to current customers. So the place to start would be whoever you currently bank with, either deposit or lending, or both. Start there and go to their website. If you just search for terms, coronavirus, PPP, most banks at the very top of their site will say lender, coronavirus resource page or something like that. Click there, it'll take you. Call your bank if possible. Get their particular application information. The detailed application information for Fulton is different from the detailed application information for PNC. Similar, but different. So go to your bank. And they're under an avalanche currently. So unfortunately, you have to be patient. The application, as I said, will last until June 30th on this. So not EIDL can go to Christmas. This is June 30th. But it is, or until the money runs out. It's $349 billion. As of yesterday morning, I haven't seen this morning's note, but as of yesterday morning, they had theoretically received and approved $30 billion. So that's 1/10 of it. I don't know that they'll continue at that pace. Maybe they will, but they have a lot to work through. In general, what you ought to do if you're thinking about it, collect your company, your business information, tax ID number, ownership information. If you have 2 or 3 owners, you have to list them all if they're over 20%, give a little more detail, but have all that ownership information. And have the last 12 months of your payroll information, payroll reports, and so forth, 1099 miscellaneous if you're a contractor, self-employed contractor. There is no information about how well there is no information about how well your business is doing or how much money it made and so forth, because that's not relevant here. They're just interested in the number of payroll, the amount of payroll you have. Download the application and application instructions from your lender. They all have them on their website, or most of them do. Again, you make the application via email or other e-portal. I would say the sooner the better. This money will run out eventually, but the pile seems to just be getting deeper and deeper at various banks. And so if you can get in early, that would be great. Turnaround time is supposed to be rapid. Like EIDL, it is too early to tell. The SBA claims that they have approved some loans. They even claim they have funded some loans. We have heard stories of neither yet. So that's like the EIDL. I think this week we will hear more. I'm going to turn it back over to Steve to talk about the interactions between these 2 programs.
Thank you, Rich. There are several key ways in which these 2 programs will interplay with each other, and I'd like to highlight the ones that we know currently. They are separate programs. We do not know how many of our SCORE clients will take both loans. As you can imagine, that's going to be, or any loans, that's going to be a case-by-case situation based on their reserves, based on what their prospects are for reopening. But we have many clients who intend to and have applied for both loans right now in advance in order to make that decision several weeks from now, when perhaps there is a little bit less fog and a little bit more clarity in terms of their business, while they take this no-cost option to apply for both. So many are applying for both and then waiting and seeing. One key example for the EIDL loan. This is a loan in which you apply, but you don't ask for how much you need. You're told how much will be lent to you several weeks from now. So generally, an organization, in most all cases and in your cases, may apply for and receive both loans. That is definitively correct. Now, if an organization, there's some qualifiers here. There's an interplay with the EIDL loan advance, which I mentioned is up to $10,000 will be forgiven. If an organization were to receive that advance and then eventually apply for a PPP loan, the amount of that advance would eventually be subtracted from the calculation of any loan forgiveness amount for that PPP loan. So for example, if someone received this month an EIDL loan advance of $5,000 that does not need to be repaid, and this summer receive a PPP loan, spend it, do the calculations and find out that $10,000 of that loan was forgiven, the next line will be reduce that forgiveness amount by how much you received from your advance, 5,000, final amount actually forgiven from the PPP loan, 5,000. So it'll be netted from future forgiveness amounts for the PPP loan. The proceeds from both loans, if both were taken, expressly cannot be used for this defined term, the same purpose. What we believe that to mean, to prevent double counting, simply put, is that the same loan amount, the same loan dollar, at the end of this time period cannot be reported to have covered the same expense in the same month, the exact same expense. So we do not think that that is going to be difficult for our clients, as we see it, to comply. They will easily, if they keep careful records of how the loan proceeds from both loans are spent during the in the subsequent months, we believe they will easily be able, and there's no time period on when you need to spend the EIDL loan. It's as long as the term of the loan. So it'll be easy to segregate the loan proceeds from the PPP loan that need immediately to be accounted for as being spent on payroll from the EIDL loan proceeds, which could be spent prior to that or after that for rent or utilities, for example. It's really going to be, to make the job easier for the borrower at the end for the small business will depend really on just how carefully they're keeping their records. But it should not be a deterrent from applying for it. And if it is necessary and suits your business to take external funding, to take it from both. Kathleen and the group, that includes our formal part of our presentation. We're happy to answer questions, whatever format you've been working with.
Kathleen, do you want to moderate the questions?
Moderate?
Yes.
In the meantime, I'll mention an anecdotal story I ran across yesterday from a client thinking about preparing your records for the PPP loan. If you find a bank you intend to apply for, their website should clearly have the records. She is a very organized person. She pulled it all together. But when she converted from a sole proprietor to an LLC 5 years ago and got a new EIN, she was sure she had the original document that came back online from the IRS that confirmed that here's your IRN from the Internal Revenue Service. It doesn't matter if she's been reporting it, using it, her tax returns, her refunds are all based on that EIN. She's stumped for right now because the IRS is not returning phone calls temporarily, that she does not have the original copy from the IRS that confirms her EIN number and her business organization, the bank tells her. Just an example to be, preparation is key here to get all the documents that your bank will require. Rich, do you have a comment to follow on?
Yeah, I was just going to say, this also changes from bank to bank. The SBA requirements for the PPP is, the bottom line is, this is borrower's responsibility to report the correct information. The bank is not supposed to audit that information. They're supposed to confirm in some way that it's correct, look for obvious errors and so forth. And there's some suggestion in the guidance, if you can't find one bit of information, but you have another that shows roughly the same thing, that should be okay. How banks interpret that changes from bank to bank to bank. And so, in that case where you have 8 pieces of information, but not the actual official one, I would say, if she can, to the extent that she can push back and say, look, here is all this stuff that shows this is my real EIN, even though I don't have the official form. There's some bank discretion there. They may still use that discretion to say, no, not good enough, but there's some flexibility theoretically there. Sorry, Kathleen, we filled enough time. I hope that you could arrange your thoughts.
I just wanted, no, I wanted to make sure that my mic was open. Um, I'm not used to being quiet this long. Anyway, first of all, I want to let anyone that know that is connecting with us by phone that you can text your chat questions to 717-598-1189. And we have a couple of questions that are in the same vein, and either Steve or Rich can reply. For the PPP, are the owners considered to be employees?
It's a good question. The owners are, if they are paying themselves a salary, then you have depending on how you're organized, you may have your own W-2s and so forth. If you are purely paying yourself out of distributions, then theoretically, you're not employees. Again, if you've paid yourself in some way, if you have income tax information, each bank is probably going to exercise a little bit of discretion there. Certainly collect that and turn it in and see how far you get. I don't have a definitive story on that because I'm not quite sure how they're going to wind up interpreting owner distributions. They are not. I mean, you are not an employee in that sense. But it partly depends on how you're doing it. Sorry, I can't be clearer.
Okay. Another in that vein, an independent artist, sole proprietor, what do they present as documentation for 12 months of payroll?
Probably your taxes might start if you're somehow earning your own money, or whatever you have been paid in whatever way you have been paid. Maybe you have a 1099 if you were hired to do something, but whatever information you can get that shows that you have been paid, that you've earned money.
This is Steve. I'll just add on one common source I believe that'll be requested or required by most and would be the best documentation if you had it, was the Schedule C of your 2018 or 2019 tax return. It will confirm that you had net income and that you paid or owed the payroll taxes, both sides of the payroll taxes on that, which is primary confirmation that you're reporting it as income. So that will certainly be one source, Schedule C of your of your 2019 if you filed it, and your 2019-18 if you have not filed 2019 will be I know will be at least one what appears to be acceptable source for most. I think it'll need to be supplemented though.
Okay. We have a question from Mark Reinmiller of Connective. He said he's heard that subcontractor costs / freelance costs can be included in overall payroll amount when applying for the PPP. Any insights here, Steve or Rich?
Yeah, the guidance is sole proprietors, independent contractors, and so forth can apply for PPP. Subcontracting expense is not included in an employer payroll costs because the subcontractor can apply separately. So they don't want to double, in their minds, I think they don't want to double count them.
Does that answer your question, Mark? Okay. From April Copenhaver, Mulberry Art Studios. It's 2 questions. Let's do the first one. Is there a way to print out the entire EIDL application before applying live online? She's a sole proprietor, but she couldn't get past the screen asking for the second owner. What should I do? Or is that a...
This is Steve. It's 2 different questions. the way it's designed right now, and we don't have a very current set, but we're trying to obtain one of screenshots. And if we do, we'll pass them along to you to pass along to your members. The way this has been crudely designed a week and a half ago. I have dealt myself and with 2 other clients in terms of getting stuck. And so I'm not sure who had that question, but I would invite you to contact me directly by email. I've walked 2 clients who are stuck on that page to get to be able to press the next button. We've worked through it together, and I'll be glad to work through that together with you.
Steve, I can bring up one anecdote. I worked with a not-for-profit who filled out the EIDL, got stuck on a different page where it asked for the first owner. And of course, they had no first owner and couldn't get past the ownership page. They wound up calling the SBA and getting through. And the person at the other end said, just fill it in, fill whatever you need to fill in to get to the next page. And so suggested to this person, put your own name if you want and just put 1, 2, 3, 4, 5, 6, 7, 8, 9 for the Social Security, just so you can click the box and move on to the next page. Not fraudulent information, but dummy information where clearly no information should be there. And so this is advice based on that. If you can't get past that second page, the second owner, and it demands it, maybe you just put in something to move past it.
Thanks, Rich. Particularly for nonprofits. This form was developed only for profits until it's being used for nonprofits 8 days ago. And the required fields for profits has been perplexing to nonprofits. We've gotten them through. I think there's a particular snag in it that happened to me personally, and that 2 of my for-profit clients, we walked through and worked around the owner section. So if whoever asked that question, I know you have Kathleen's information. Would you contact her and she will give you my phone number and email? Is that fine, Kathleen?
Well, actually, what we're going to do is Laurie will be the portal for this. Laurie will be directing, she has April's contact information, and she will be sending out a link to our mentors and to April for April to contact Steve.
Great, excellent. Don't go through for this one. The SCORE, if you're not a SCORE client, the SCORE website.
Yes, I have.
You can put whenever you wish, but I'm happy to be a direct connect to solve this, work on solve this one problem for you together.
Yes.
We can do it. I believe we can do it same day.
I'm also going to be putting up a screen share for anyone here who doesn't have a SCORE mentor. If they would like a SCORE mentor, it will be the contact information on how to get that. And of course, all of this will be in the meeting minutes that Laurie will be sending out. The second part of April's question is also, what about rents? Does that include classes, workshops, special events, and also dedicated studios that are rented? I guess it's also rents expenses that she's.
Yeah, that's an interesting question. I think, and it probably applies to both of us. I think rented studio space would clearly be a rent. Classes, workshops, I think would probably be stretching it. On the PPP side, that would be a question for your bank because you're going through the bank, but I think that might be stretching it. Steve, you have rents on EIDL.
Right, no official pronouncement on that. From my reading, from what I'm reading, the EIDL loan, if it's taken, the reporting will be self-reporting and self-certification, and that form has not yet been developed after granting the loan to self-certify that it was spent on what it was intended to be spent on. What I think the rent that is thought of generally is for someone to continue to pay their lease, basically pay their lease payments if they have space, and pay their landlord so their landlord can pay their bills or their bank loan. That's the spirit of what it's intended. And Maya, you're asking a question that's so specific, and I'm sure won't be unique, that I know hasn't been is worthy to have been asked, and it hasn't been answered yet.
Okay.
This is symptomatic, by the way, of a lot of the questions. The rules came out pretty quickly from the legislation. There's been guidance that has been followed up from the SBA, but it covers the broad outline. There are just so many detailed questions that are not exactly covered, and you just have to either give it a shot or wait for further guidance, which seems to be coming out.
Lori, would you be kind enough to open up Jeremy Young's mic? He has some information from EDC about one of the issues regarding the PPP loan.
Yes, he is live. Jeremy, you can go ahead and explain what you learned.
Thank you, Kathleen and Lori. Can everybody hear me okay?
Yes.
I believe it was communicated that EDC, one of our local business organizations here, is a servicer of SBA 7A loans, and therefore would be able to help coordinate PPP loan applications. I confirmed with Lyle Hostler a few minutes ago. Lyle Hostler is the vice president at EDC, that information is in fact true. And he said, unfortunately, that's not accurate. EDC is not authorized to do SBA 7A loans, only 504 SBA.
Correct.
So EDC cannot coordinate a PPP application.
Thank you for that. Yeah, you have to go through your bank or credit union.
I can tell you that Lori let me know yesterday, because I learned that my bank, Santander, was not at that time open for PPP loans. Since then, they opened last night. They opened, Lori, but Members First Credit Union was open and welcoming. Then that's the first time I heard that.
Yes,
so
and welcoming, Kathleen, welcoming non-customers. Did you hear? Did they say anything about that?
Yes, I had spoken to John Carpenter, and he said that they are welcoming both of their customers as well as non-customers. They want to be of an assistance to everybody.
Wonderful, wonderful. I should mention that even if you are a non-customer of Members First, or there are a couple of others that seem to be open to that, to non-customers, be prepared. I haven't talked to them directly, but be prepared to have to open an account of some sort. Mm-hmm. And certainly if you wind up going to a new bank, be prepared for, they still are under the anti-terrorism, know your customer, money laundering regulations, to bring all sorts of documentation about who you are.
Yes.
Because that's one of the big fears of all of this, is that the money's flowing through so quickly that nobody's paying any attention to that. So they're still under that regulation. That's great to hear about Members First.
Yes. Mm-hmm.
I love the way information is passed at our merchant meetings.
Yes.
Okay, another question from Mark, again of Connective. In terms of documenting how PPP and EIDL funds are used, what's the best way to track which funds are used for which purposes if funds are put into the same bank account? Should funds be put in separate accounts?
I'm dealing with a couple of customers that are planning on putting PPP when they get PPP, keeping their fingers crossed. If they get PPP, opening up a separate account so that there's no chance of merging them, and the reports are absolutely clear. If you keep detailed records, there's no requirement that they go in a separate account. But for the cost of a separate account, it just makes the documentation so much easier. I think it's a good idea. Steve?
I would recommend the same. At little cost, use the bank statement as your not internal or QuickBooks. But I think first it'll be easiest by far to use and pick out and clean it up at the end when the actual reporting comes out, and what format to go back and report it from bank statements. not from some sub-accounting inside your QuickBooks.
Mhm.
I think using the bank as the accountant here would be the safest and surest way to have the information available and documented at the end.
But keep detailed records too. In addition to that, you
Yeah.
can't have too much documentation because we don't know how the forgiveness portion is going to work.
Okay, from Donna. Um, it sounds like both programs are based on the number of employees from previous years. What do you do if your number of employees will be higher once things start to get back to normal?
Um, I guess there are two ways to interpret that. One is make up a number. Suppose you had 10 employees in previous years and today you only have 2 because you've laid off 8 of them. It will be based on the 10 employees from last year for the PPP now. And things will get better when you can hire back those other 8. And that's part of the purpose of the program. If you had 10 employees last year and you just think that once the business gets back to normal, you're going to be able to hire 20 more employees for 30, that's not probably how the PPP is going to help you. I mean, that's hoping for better times and general improvement. It will only be based on what you had last year. Or in the prior 12 months. I keep saying last year, but as we move farther and farther, last year is not just 2019. It's the first 2 or now 3 months of 2020.
Okay, I think Colleen, can you correct me because I know you've been keeping a close eye on chat. Were there any other questions that I might have missed written in chat? There were lots of good information. Everyone's sharing what's happening in their organizations there, and it will all be contained in our minutes.
Kathleen, I don't think that you missed anything. I do have them all recorded, and I'll share them with Rich and Steve should there be anything that they want to follow up with.
Thank you. Yeah.
You're welcome.
You know, I think Kathleen's comment about members first is an excellent example of just what we were talking about. Santander and possibly members first. The information today may be different from the information 2 days ago and may be different from the information 2 days from now. This is changing all the time. So to the extent that you can among yourselves, keep sharing with one another. Today's information is not tomorrow's information. It can be really helpful if somebody says, oh, my bank does X or my bank does Y, and that can be helpful to all of you. Same with the EIDL as that application keeps changing and evolving.
Okay, if there are no other questions, Marshall, with your permission, I'll give a brief MIM committee report.
Kathleen, did you see the question there from Heather?
Oh, I'm so sorry.
This is Steve. I have it in front of me.
Go ahead, Steve, if you could read it.
Heather asked, first, have you heard when employees will start receiving the added $600 per week in unemployment compensation?
I have not.
I have not heard definitively. I have read in the Wall Street Journal that Pennsylvania has 2 problems. One is that the phones are too busy for everybody. Secondly, with unemployment compensation broadened now for self-employed and independent contractors, as of yesterday, they still are not ready to take applications from that new group that is eligible. And thirdly, the Wall Street Journal reported that the money has to first flow to the states, then they have to get their systems in order. The Wall Street Journal didn't hold any promise that the 600 will be starting till next month. So a reliable source, but unverified. Pennsylvania apparently right now is, from all accounts, in terms of volume, broader eligibility, and the $600 per week from the federal government, a mess. overwhelmed, aren't we all? Second quick question was, does the PPP include employee insurance paid by the employer?
It
For example, health
includes,
insurance, right?
yeah, it includes group health insurance and various retirement benefit costs. So again, some banks are giving a very nicely detailed sort of spreadsheet to walk you through that, but it does include some of those costs, yes, as part of the formula for determining your loan. Sorry.
There's so many little hidden details. I think that it shows more than ever the value of having a SCORE mentor if you have not gone through this process yet. So while I'll give a very brief MIM committee report, with Marshall's permission, I'll share that slide about how to get a SCORE mentor. Is that all right with you, Marshall?
You have my permission, Kathleen.
Thank you so much. How times have changed. So I'm actually asking permission for things.
Right?
So
Kathleen, if you're moseying on, Rich and I will just say with and Marshall, with your permission, what a pleasure it was to spend this time with you. We're at your disposal, especially for any specific questions. And it's been a pleasure to join you this morning. Thanks for inviting us in.
Thank you.
Yeah, Rich and Steve, thank you so much. This was invaluable information for this group, and I'm sure you'll be hearing more from us and from the participants in this call. So thank you, and thank you for SCORE's continued partnership with everything that we do.
Thanks.
Happy
Good
to
luck
serve
to you all.
Thank you.
Thank you.
There we go. Does everybody see the right screen